I'm Shilpa Arora, Senior Director, Anti-Financial Crime at ACAMS. It's my pleasure and privilege to be moderating this session, the first keynote session of this morning, with a very distinguished set of speakers and panelists surrounding me. In terms of introductions, Richard's already introduced me, so I won't overdo it. Maybe I just tell you a little bit about ACAMS, and then I will pass on to my panelists to introduce themselves. So ACAMS, who I work for, is the largest global membership organization. We fight financial crime through professional training and development, thought leadership, and our best-in-class peer network. We've got a number of ACAMS staff in the audience as well. Perhaps you can just raise your hands, those of you. Excellent, thank you. So feel free to come and talk to us after. Right, so without further ado, let me introduce our speakers. To my right is Jeff Simmons. Jeff is Chief Risk Officer and COO for MUFG Securities Europe. Jeff, welcome to the session. May I ask you to tell the audience a little bit about your background and your interest in financial crime? Thank you.
Yeah, sure. Is that on?
It doesn't look like it. Yes, it is now.
Oh, apologies for that. And it's kind of ironic that I'm here in a technology forum and I can't work the technology, but never mind. As Shilpa said, I'm the Chief Risk and Finance Officer for MUFG Securities in Europe. So we are the Brexit entity for MUFG, based in Amsterdam. So I was part of the project to create that, and now I've kind of transitioned into this more managerial role. Why am I interested in financial crime? It's because it's, I think, as Richard said, with almost 100% certainty, there's going to be an increase in it. We're fighting to keep up with money laundering and financial crime activities. So events like this are very important for us to see what is happening out there. So,
fantastic. Thank you, Jeff. And to my left is Yuri Brudman. Yuri is a Chief Compliance Officer and MLRO for SEB Luxembourg. Yuri also happens to be a friend of ACAMS. He's a chapter board member of the Luxembourg chapter of ACAMS. Welcome, Yuri. And same question again. Would you tell the audience a little bit about your background and experience, please? Thank you.
Good morning, everybody, and thank you, Shilpa, for the intro so far. I'm very happy to be here. I'm Chief Compliance Officer at SEB now in Luxembourg. It's a large Scandinavian bank which has a presence here in London as well. I visited the office, took the opportunity. Been in compliance for about 20 years, done roles with several banks, HBC, PayPal, and now a Scandinavian bank. My main interest is really to do my part of fighting financial crime through my day-to-day job, through interactions such as this, and also, a big fan of ACAMS and the trainings they provide as such.
Fantastic. Thank you, Yuri, and welcome to the panel. And our next speaker is Martin Rehak. Martin is CEO and founder at Resistant AI. Martin, welcome to the session. Perhaps you can tell us a little bit about what inspired you to found Resistant AI. It'd be great to learn about that. Thank you.
So it has been a journey to compliance, which started in cybersecurity. So as a team of founders of Resistant AI, we started working in the network security around 2005, applying machine learning to the problems of security that everyone told us were crazy because no one would ever use AI to do anything in network security. In the hindsight, that wasn't the smartest opinion. So we built a company, we sold it to Cisco, we built something into 25 million devices protecting service using AI and machine learning to directly eliminate criminals hijacking computers of large financials and other institutions, and then we got bored. So we decided that we need to fix on a new crime, the coming wave of financial crime, using the same techniques deployed by the criminals in cybersecurity. Because if you turn banking into code, you essentially turn all the criminals and all the fraudsters into cyber criminals. And that's the thesis on which we founded the company. And now we discover everything from forged documents used in the onboardings, such as bank statements, pay slips, and the others, and down to the optimization of AML systems, where we look at the data the bank has on the customer to decide whether this should be treated with high priority or not. And this can get down the alert rates quite low compared to the standard. and also find some cool new stuff. And we also are friends of ACAMS, let me say, because at the ACAMS hackathons in the Orlando and Las Vegas and last conferences, we won the hackathon as a company, which makes us very proud. Thank you.
Fantastic. Thank you, Martin, and welcome to the session. And last but not least, we've got Amir Hanif. Amir is UK MLRO and Head of Financial Crimes for EMEA for Stripe. Amir is also chapter board member of the UK chapter for ACAMS. Welcome, Amir, and likewise, could you talk about your experience and your background, please? Thank you.
First of all, thank you very much for inviting me. I'm looking forward to listening to the other speakers and meeting the attendees at the conference today. So I'm the Global ABC Anti-Bribery and Corruption Lead, Regional Head of Financial Crimes for EMEA, and then the UK MLRO for Stripe. Prior to joining Stripe, I spent about 5 years at Standard Chartered Bank in Singapore and Bahrain as the regional head for APAC, and then for the Middle East and North Africa. And prior to that, I worked in the US government working on financial crime issues. The reason why I think this is an important field and why everyone here, I consider them to be financial crime fighters, is because it's one of the few fields where you can actually help business grow, but at the same time protect people and save lives. And it's very rare to be in an industry that does that. So my interest comes from actually having an impact on financial inclusion and saving people's lives, which sounds hoity-toity, but I think that's what we do. So very nice to be here. Thanks.
Fantastic. Thank you, Amir. And I'm going to turn my attention next to the audience. So we hope to keep this session very, very interactive. So please do download the app if you haven't and start asking us questions. I do have some questions prepared, but I'd rather ask the questions that you want answered. So hopefully we'll hear from you and I will see questions pop up. We want to begin with a poll question. I understand the poll was released earlier this morning, so it would be great to see the results of the poll if that's possible. So the poll question is, what is the most important macro force impacting your sector? A, recession and wider macroeconomics. B, increased regulation and geopolitical stability. C, opportunities and challenges of technology. Or D, crypto assets. So if you go to the Brella app, you click on the left top corner, the two little lines that appear, and then you should be able to see a link for Q&A and polls. Right, we'll give you a moment to get there and put in your answers to the poll question. And the team, I don't really see the results of the poll appear here just as yet. Okay. I'll give it one more moment. I might have to go to show of hands if not. Ah, excellent. There we go. Wow. So there is a clear lead here. Sorry you cannot see this, but maybe you can on your apps. So this is the view I've got. The first and the most important is opportunities and challenges of technology. So Martin, I'm coming your way there. The second one is increased regulation and geopolitical stability. The third one is recession and wider macroeconomics. And crypto assets, 12%. Interesting. Fantastic. Thank you very much for that. Please keep the questions coming, and I will be led by you. So I'm going to go, first of all, straight to the increased regulation and geopolitical stability, perhaps. So let me start with that, and then, Martin, I'm going to come to you for the technology pieces. So Yuri, if I can start with you. It's been a year nearly since Russia invaded Ukraine. And what are your thoughts on that kind of increased geopolitical instability and how it's transformed the ways in which FIs work more broadly, but also the impact on financial crime?
Yeah, that's a very topical point, of course, and I think there's multiple elements to what the invasion of Ukraine has resulted to over the past year. Obviously, the sanction element is pretty obvious, but I think from the start, a lot of institutions were struggling with the the level in which things were changing, new sanctions being imposed like on a daily basis, and how do you stay up to date with how that impacts your day-to-day business. Like any crisis, this one, we've seen the COVID crisis before. These are opportunities where criminals will try to benefit and gain their kind of profits in that sense. So even on the back of the invasion and related geopolitical situations, there's been more crime in human trafficking in those areas. And that is, of course, as for financial institutions, that's where we want to try and be ahead of the curve to prevent that, to pick these things up and make sure we do our role in society.
Thank you, Yuri. Jeff, I turn to you for the similar question, but the impact on supply chains and related AFC controls. I mean, there's been unprecedented sanctions. It's obviously shaken up the way we do business overall. So what do you think is the impact on supply chains?
Yeah, I mean, I think for a financial institution, supply chains are either easier or more complex, depending on your point of view. And I kind of see them in three categories, really. So first of all, you've got your actual counterparties that you're doing the business with, all right? And that may sound pretty obvious, but you can't really see in all cases what they are doing business with. This is where the KYC and the transaction monitoring is so important. The second really is the actual suppliers of the services too. Now, being a Brexit entity, we're all about outsourcing and third-party risk management, and again, getting that visibility in through your suppliers down to who they are getting their services from, and deep down into that chain is quite difficult. And whereabouts do the sanctions live there? And then the last one I'll just kind of throw in here is the impact on the actual business. Talked about counterparties, talked about suppliers, but then the way in which some of your business counterparts are doing their business, and whereabouts and what field are they doing? Are they impacted by potential sanctions? German utilities, for example, have been seriously hurt by their dependence on Russian energy. All right, so it's impacting them as well, even if they're not engaging in unlawful activity. So it's quite expensive, I think.
Excellent. Thank you, Jeff. I'm going to move on to technology here, and Martin, I'm coming to you for this. So what are the key tools and technologies do you think FIs must introduce today to be able to tackle financial crime and sanctions, more broadly as well?
So there is no single technology that you will deploy and will solve all the trouble. I'm sorry to disappoint, but I think people in this room kind of know that already. In our view, it's always a system. Mm-hmm. And I will take the parallel back to our background. When we started doing cybersecurity 15 years ago, average bank had 3 systems: firewall, email security, and web security. That was it. Average bank now has 100+ vendors with different systems and subsystems protecting different small niche areas of the IT systems. But the same bank only typically would have 3, 4, 5 vendors protecting the core of the business from financial crime, which is something that's going to change. Because the obligation on the industry is changing, the expectations are changing, and the regulators actually expect the sanctions to work now. And that raises the bar. But on the other side, we have no single technology to answer. So it's always a combination of multiple layers of techniques, which is what we provide. We take in layers of security. You eliminate some of the criminals early on. You stop them from getting onboarded, but some of them will get through. And those need to be eliminated, identified, and reported, or offboarded. And that's the crux. It's building the whole. Your job is essentially, in our view, building the detection system akin to what intelligence agencies are doing for terrorists. You do this for terrorist money. And it has the same layers of security you get in the real world.
Fantastic. Thank you, Martin. That's very insightful. So, Amir, following on from what Martin has said about what are the kind of key technologies and tools, shall we say, in the plural, how would you go about incorporating these into your organization or, into an organization in the industry?
Yeah, before I get to your answer, I did want to add one thing to the previous question, which was, I think we talked about sanctions with the geopolitical, we talked about supply chains. There's also a mass movement of assets from entities that are sanctioned to jurisdictions that are not sanctioned, and there's a money laundering nexus to that because we need to understand where the source of the funds is that we are processing, and the individuals who may be processing it may not be sanctioned, but they are using funds that are sourced from sanctioned individuals or countries. And to do those kinds of things, just to connect to the question you just asked, there are multiple, so as you mentioned, multiple technological solutions that are implemented. And I think the key there is it depends on the kind of financial institution you are, because if you take a look at legacy financial institutions, like you said, you have so many technological solutions already in place that when you implement a new solution, essentially it's going on top of an existing solution, which makes things very complicated from an assessment and then analytical perspective. The one advantage that FinTech companies have is that they have a blank slate. So when they're developing these technological solutions or they're bringing in vendors to implement the technological solutions, they're coming in on an empty slate. So you have cleaner data, which is the key to resolving a lot of these alerts and understanding the risks. So a risk assessment process of knowing what kind of risks you're facing. Your tech folks being involved in that risk assessment process, telling you what is available, what is not available in the system currently and what's needed. And then implementing that solution on top of the either existing or a blank slate is how we've gone about mitigating a lot of the financial crime risks that we see.
Fantastic. Thank you. We have a number of questions coming up from the audience, so thank you. That's fantastic. So the first one here, particularly addressed to Jeff and Yuri. What advice do the panelists have for financial institutes and professionals looking to stay ahead of the curve in a rapidly evolving landscape? Come to you first, Yuri.
And that's a super interesting $1 million question, I guess. But I would say, and I worked before in an innovation space in a bank in the Netherlands, is, stay interested in developments. Expect the unexpected, use tools, but also go beyond that. Work with your other risk colleagues. What I mean to say is go outside of your compliance role as such. Work with operational risk, with enterprise risk, even with legal and people like that, to make sure that you have a holistic view of staying, or at least trying to stay ahead of the curve in that sense.
Fantastic, thank you. Jeff, there's no such thing as a wrong answer for this question, or every answer is a wrong answer, isn't it?
Yeah. Well, yeah, there's no such thing as a wrong answer, but there is such thing as a stupid answer, I guess. I agree with Yuri. It's just being vigilant and questioning, and I think, if I could steal his word about being holistic, is we have to be ahead and invest, I think, as Richard's slides showed, in the technology, right? It's an arms race. So you have to invest in the technology, but with all due respect, the technology is not going to solve all of your problems. So you have to be sitting on top of the technology and questioning and just being vigilant and exploring all angles, operational risk, compliance, and just exploring all angles. That's all I can say.
And elaborate on what was said, because
Go for it.
The technology with humans is so much stronger than technology without humans. Automating some stuff, especially in the rapidly evolving edge threats that appeared yesterday and will be disappearing tomorrow because the attackers will move to something new, automating that away is incredibly hard. Trust me, I know that. So you want to leave people in control. You want them to be empowering by making decisions and judgment calls, But in the other hand, you don't want to flood those people with thousands and thousands of meaningless alerts that should be automated away. And for me, that's the biggest thing about keeping ahead of the risk, is automate as much as you can, but don't automate everything. It's still a judgment call made by humans about humans.
Fantastic, thank you. We've got many more questions coming from the audience, so I'm going to pivot to some of those questions. One very interesting thing, Amir, I look to you for this. What macro event impacts how you manage financial crime that is yet to happen, that you're most concerned about happening in this coming year? So they're very precise about their timing. So it is 2023 we are talking about, and what has not yet happened. So maybe we need your crystal ball out here.
It's not a difficult question to answer at all. So there's a couple of things, I think, that we should be cognizant of. The first is developments related to what's going on with Russia and Ukraine, right? I mean, that event is still ongoing. There may be a risk of it expanding, and if it expands, as I mentioned, there is asset flow risks, sanctions risks, supply chain risks, and all those things that go along with it. But there, to me, the other risk that not a lot of people talk about, which is one of the questions, Shilpa, that you had in the poll that you asked at the beginning, relates to global economic slowdown. And what I mean by that is two things. The first is, whenever there's an economic slowdown, financial crime always goes up because people are forced to find ways to generate revenue, right? You need to make money to pay for legitimate expenses, and how you go about doing that is you give in to temptation, or you give in to criminals essentially coming to you and saying, you know, be a money mule, or things like that, right? So that's the first. The second is funding goes down for new projects. So it's an evolving landscape. There's always new technology, new risks coming up, so you need new technology to fight those risks. But if you don't have the resources to implement and develop those new technologies, then the criminals also get ahead. You know, the criminals don't stop, and they don't have bureaucratic benchmarks to stop them from progressing. We kind of have to be as nimble as them, and for that we need resourcing.
Fantastic. Thank you, Amir. On that note, let's shift to kind of macroeconomics and the recession that we find ourselves in. So Jeff, perhaps I turn to you. As Amir said, fraud and financial crime does tend to increase in a recession, but it's also the same time when organizations, you know, put on cost controls or tighten their belts a little bit more. So how do you think this impacts on the industry's ability to fight financial crime?
I just think it increases the risk significantly, I think, to Emma's point. I mean, it's an arms race, right? And if the criminals you know, have the time and the energy to invest in what could be big rewards, on the other side of that, you know, crime equation, I guess, is the institutions trying to protect themselves. They also have to invest in that, in the technology in order to combat it. In recession or downturns, of course, banks, any corporates are reducing staff, and you know, it's always the back office that gets hit first because you don't want to hit your revenue earners. So, you know, so there's that. Then you get an event like Russia. You know, 2023 is being kind of coined as being the year of defaults. So we're probably going to see some relatively big defaults. Generates volatility. Volatility is the perfect smokescreen for criminals to operate under. All right. And so again, we have to be vigilant there in terms of what happens in times of increased volatility. And then just to kind of finish off on what Emma said, is I just wonder how much the regulators will incentivize you know, institutions to increase their technology spend.
Love the use of the word incentivize there. Fantastic. So there is a question related to regulators here. which I put in the cheeky questions category, but I'm going to ask it nonetheless. And conscious that none of us here are regulators, right? So perhaps, we should be asking a regulator this. So the question is, it seems dirty money and illicit funds have been moving into new jurisdictions, especially since last February. Why don't regulators share actionable intelligence about bad actors more openly, especially using API feeds and subtech? Who wants to go? I'm looking at all of you.
So
let
me take it. And I will answer the question by also being cheeky. I would say it would be completely useless. And I'm sorry to say this, but we basically see that the actual evasion techniques used by the criminals this year are lying. So if you know that you are on a sanction list, and you know that your money is easily traceable through one or two hops on two shell companies, you would never use those companies. You would simply lie about the origin of the money. Mm-hmm. And most of you come from financial institutions. You are inclined to trust your customers, to fight for them. They are your customers. But many of the customers are lying to you, and we see this. And I'm sorry to break this news. But so if I can answer the question for Amir, what's changing this year?
Please.
What we have seen since the beginning of the year and second half of the last year is basically increase in number of forged documents. And we see people getting around sanction regimes, but basically pretending to be someone else, which is very easy, and most banks trust documents they get on a face value.
Can I defend the regulator?
Sure, go for it.
All right. So I think, you have to understand the pressure the regulators are under, right? So as I mentioned earlier, there is a bureaucratic hurdle. So for a regulator to make a change to a regulation, there is a long and cumbersome process because there's a whole host of parties you need to go through, including political parties. And so for them to do that, that takes time, and criminals don't stop. So they're moving at a much faster pace. So that's one reason. The second reason is also that it's very easy for us in the private sector to say, why didn't you share this information? But there's privacy considerations, there's legal considerations. They're all involved in a decision whether to or whether to not share the information. So I'm a big fan of the FIUs and the work that they do and the integration that they have with the other FIUs. And I'm also a big fan of the regulators and the work they do because it's a very tough job, and it's much tougher than what we face in the private sector. And then obviously the criminals have nothing like that. So I think we're going to talk about this a little bit later, but this is a really good opportunity for a public-private partnership and for us to implement that and proactively support that with the regulators and the FIUs.
Fantastic. Thank you, Amir. And, joining you there, I think organizations or setups like the Gimlet have been very successful in the UK, which is exactly what they do. Even if they're not using subtech to do so, getting around a table, nonetheless, it's good discussion to have. We've got a few more questions coming up from the audience, so keep them coming. By the way, we will come to Q&A at the end where somebody will go around with a microphone. So if you want to ask a question by putting your hand up, start thinking about it now, and I will come to you towards the end of this session. Right. So the next question, Martin, I'm going to go to you for this. This is a very specific timeline. What is the most exciting new technology you have seen in the last 3 months that would disrupt the sector?
So I love the timeline because it makes it so easy to answer, and I'm a lazy person. So it's definitely the ChatGPT and generative AI. And I'm stealing some of the long-term views here. But this is a transformative force that was brought to public attention now, but has been brewing in the background for many years. And the reason is that as a criminal, you need efficiency, you need automation, and you don't want too many people in the organizations because people are liabilities. And these techniques allow you to basically automate human-like behavior that withstands superficial verification. So if you have something like 5 to 10 minutes to verify a customer in a merchant onboarding, is this a real website? Are they selling actual stuff? Or are they selling cocaine or crack or some synthetic drugs? It's very hard to ascertain today that they are A or B, because they can generate very easily the answers, a plausible personality. They can interact with the support personnel on a chat, and they can basically get onboarded very successfully. And the best thing, if they don't, and if you reject them successfully, they have 10 more attempts they can do in the next second. So it's moving at the speed of the API using automated processes to overwhelm human-driven responses is something I'm expecting as a change coming in the future. And we already see this applied against our customers.
Fantastic, thank you. That's a very precise answer. And we talked this morning about how ChatGPT seems to be finding other uses as well. So if any of you have teenage children, watch out how they're producing their homework as well, right? Anyway, moving on to another topic, which is regulatory pressures. So Yuri, I'll come to you for this. There's a question specifically that says, how do we balance the needs of AML compliance with that of innovation? I'm kind of going to link that to regulatory pressure as well, because of course, if you look at the last 10 years, AML regulations have tightened, have increased, and as a financial crime community, I think we broadly appreciate that because we've got a framework to base our our decisions on. But interesting to hear your views about the balance and the pressure.
Yeah. An interesting question indeed. Balance is really what we need there. We speak about systems, we speak about cooperating in the industry. I don't go shopping with the Ferrari. So if you have you need to tailor the systems you're using to help you fight financial crime in your institution to the kind of customers you're having, the product offering. These are things which are not new, which I'm saying. I'm sure you know all of this, but you start with your business-wide risk assessment of your customer, your product offering, your geographical span, and things like that. And that's how you would to choose a system and balance, how much you can spend on that as well. That's obviously also important. And getting that right, and not just go for a system which you think will help you, but if you don't understand it, and if it's either too expensive, or you can innovate or something to death without meeting the goal probably.
Thank you, Yuri. Another related question to this, and Jeff, I'll turn to you for this. The question is about, isn't the problem that the regulatory framework is allowing the banks to do the bare minimum that they need to do legally? Surely the banks need to do more than the bare minimum. That's the question. What are your thoughts?
Well, yes, of course. There's always needing to do more than the bare minimum. That's one thing. But I use the word incentivize. The regulator incentivizes financial institutions to spend on the technology, right? And the incentive is, again, the slide that Richard showed, where you've got not only the fines, but you've also got the fact that it's in the FT or something like that. Mm-hmm. Powerful incentive to do something. And I think it's difficult to say if it's the bare minimum being done or not, right? Because the problem with that slide is that it's only the institutions that are, I'm going to say, caught and identified publicly. All right? We don't know what they've stopped or what is going on in behind the scenes, and that's an almost impossible metric to get. So I don't think it's fair to say that institutions are doing the bare regulatory minimum, right? Because in some ways I don't think they are. $4.6 billion worth of investment into technology doesn't sound small to me. It's certainly going to buy a couple of Ferraris for Yuri. So.
Yeah, maybe a fleet of Ferraris, but yes, absolutely. We haven't talked about crypto assets so far, and this is the first in any conference that it hasn't come up in the audience Q&A. So I'm going to bring it up. Martin, I'm going to turn to you on this, and then perhaps after to Amir. So the views on crypto assets kind of vary, right? From one extreme that it's all hot air to the other extreme, which is it's the future of the world. So Martin, can you help frame this in the context of AML and financial crime? How do you see, what role do you see crypto assets playing as that disruptive force?
It's a very interesting question, and let me answer this in a more light-hearted way. Because if you look at any currency in the world, its demand for the currency is determined by what you need it for, what can you buy with the currency. In terms of crypto assets, it started historically that you bought illegal stuff. You paid for ransomware attacks, which is one of the fastest growing categories in the cybercrime. So cryptocurrencies are directly funneled by the cybercrime as one of the usages. The other usage, with Silk Road fame, is drugs, obviously. You can try buy murder for hire using cryptocurrencies, but it doesn't work. At least I never know of a single successful case. Plenty of unsuccessful, which turn into blackmail, which is another use of cryptocurrency. And then there is obviously plenty of non-criminal or less criminal usages, such as speculation, NFTs, and the others. But all of the assets are magically prone to either direct misuse in a criminal proceed laundering, or some of them can be used indirectly to basically launder money from other criminal activities. Wash trading on NFTs being the prime example of this, potentially. So one thing that people believe for the last 2 years is that you could say crypto and make the regulatory requirements go away. I'm not a regulator or a lawyer, but I believe this is not true. And I think regulators are catching up with that. And once you subject the flows of money in and out of the crypto to the same controls that traditional finances have, the volumes will clean up. Some of the most visible cases will disappear, and we will see what is left of crypto. And I definitely see the use case for crypto in some areas. If you live in Venezuela, well, definitely, absolutely, you need crypto. If you live at Cuba or North Korea, absolutely, why not? But if you live in Britain, the usages are kind of limited right now.
Fantastic, thank you. No, that was a very insightful answer, absolutely. I suppose there is the shake-up going on, isn't there? The fraudulent actors are coming out quick and fast, and hopefully what remains is a cleaner perspective of crypto. I mean, from a more practical perspective for a financial institution or a non-bank financial institutions, what are the steps to consider either while banking crypto or managing exposure to crypto, whether the organization is into crypto or, is taking a more risk-averse stance?
So I think in this conversation, it would be better for institutions to look at crypto as one part of your virtual assets framework, right? Because NFTs, you have cryptos, you have a whole host of other assets. And this is my personal opinion, but how I look at virtual assets and the management of virtual assets from a financial institution perspective is like correspondent banking. So you take transactions that are happening by your customers and perhaps your customers' customers. You try and understand the purpose of those transactions, whether they be in crypto, whether they be in NFTs, whether they be in tokens, any kind of virtual assets. I don't think it's going away. I mean, like you said, Shilpa, the field is getting cleaned up a little bit, but I don't think it's going away because the world is becoming more digital, and you cannot do cash transactions in a digital world. So you need a channel for those transactions. So then the question becomes, well, if it's not going away, then you need a scalable way to mitigate financial crime risk in that space. And how you go about doing that. So traditionally how it happens is you have a due diligence questionnaire, people fill out that questionnaire, you do an assessment of that. But then in a digital world, as Martin said, there's the risk of fake identities, fake documents, et cetera. So it's a dual process. You have the DDQs and the standard questionnaire and assessment of that. But then you have a technological background of making sure that the information that you're getting, which will all be digital, is real. That's not fake. And to do that, you need a new framework that you need to develop. I don't know if I've answered your question.
Yes, you have. Thank you very much. I will switch topics, seeing as we're getting many more questions from the audience. So this one is about, it's a little bit cynical, a bit doom and gloom, but let's go for it. So this says, don't you think we are fighting something that's impossible to win? Criminals are usually ahead of us. They know how to avoid regs. No matter we invest faster in tech, where does it take us? Because it takes years to implement new reg tech. So who wants to go for that? Martin.
I'll take it. So I'm against fighting. I'm all for winning. And there is a deep mental distinction in that statement. And I agree with the spirit of the question. We will never solve this perfectly and forever, which actually is one of the reasons why we started the company. Because if you start a company in a field that you can solve, it's actually a very bad business. So if you see me starting a company, you basically figure out that this is not something you can ever win. The reason is that in all of the interesting points of the human activity, you don't want one side to win. We can have a perfect regime for financial crime, but I don't want to live in a society like that. I think that personal freedoms, the way how we live and the way how we let people live is actually more important. And our job and how we see our job is to increase the friction in the sense of Clausewitz defines that for the military strategy. So the ability of enemy to conduct his or her plan and bear them to fruition to something that makes them go away and do something else. And that's what we see as our job. And this is how we define winning.
Fantastic, thank you. That's a very deep and philosophical answer there. Yuri, can I turn to you next for answering the same question, but perhaps the more, compliance officer's perspective, because we've been in this game trying to fight the good fight, if fight is the right term, for a long time. There's good days and bad days. What are your thoughts on the bigger picture of how to get ahead?
Yeah, no, I think ultimately we have to continue fighting financial crime. So we certainly cannot give up. That's giving in to basically a lawless world in a sense. So whether we feel that we will win or not, I think, and I mentioned a little bit before, we should try to get ahead of that curve. There's new technologies coming and everything, but even, don't lose sight of older forms of crime. Martin alluded to it, forged documents. Criminals will use anything, newer technologies, older technologies, something which might seem, no longer in existence in crime can still lure around there. So remain very open, and we will have to pursue that. I don't know if, because there's a wider view to that, I don't know if you wanted to save that for later on the end, but I think also continuously raising awareness is critical, throughout your organization. Speak with people. Do you know your customer for real? Do you know the transaction your customer is doing? I have it on a daily basis that I meet with bankers, and sometimes you have those more difficult discussions with a client, but you have to do it. At the end of the day, sometimes I say, put yourself in a position where perhaps you have to explain to a judge, if you're being called into court, why you were cool with this transaction, with this client, why you didn't raise or escalate things. And then, that's down to the human factor. No system will help you in that.
Fantastic, thank you. We're coming to the end of our time allocation, so this is the time for any Q&A. So if you've got questions, please put your hand up. You can continue to use the app, of course, but if you would like to get the minute of fame and ask your question, then we would love to hear from you directly within the room as well. And there is someone with a microphone who'll get to you. So while people are thinking about the question, let me ask you one question here, Amir, that's come up on crypto assets. So the question is about use of crypto as a tool for sanctions evasion in particular. And how can financial institutions even come close to mitigating that threat when often these exchanges happen through WASPs, or the virtual asset service providers?
Yeah, there is a belief, for lack of a better word, that there are crypto transactions or virtual asset transactions that cannot be tracked, and I don't think that's true. You can always track them, because essentially it is a digital transaction. It's much more traceable than a cash transaction, right? Because when a cash transaction happens, you don't know where the cash came from. With virtual assets, you have digital keys, and you can track those. So it's not, in my opinion, I don't think it's about whether it can be done. It's whether there is a will for it to be done, because there is a lot of profit in these illicit transactions, and firms that are facing financial pressures may not be as incentivized, to use your word, to track these transactions. But I think it is doable, and we, as financial crime fighters, we should actually push for that, because that is the future.
Fantastic. Thank you, Amir. And last call, any questions in the room? Anyone want to put their hand up and ask a question? Go for it, sir. Could we have a microphone there? Just wait 1 second.
Hi, thank you, panel, for taking my question. I work within the insurance sector, and I see a lot of collaboration in the financial service sector between banking organizations and payment transaction management. What do you feel the synergies could be between corporate risk and commercial risk insurance policies with the banking and finance data that you hold? Because at an insurance level, insurers are reluctant to share intelligence between them for competitive reasons, but a non-competitive sector, subsector within financial services, could be of valuable interest to us.
Fantastic. Thank you. Jeff?
I completely agree in that I think that it's about the collaboration is the key to fighting this. Because I think every single organisation on its own, you can't see the holistic picture. So I think there should be more collaboration. We talked about the regulator sharing data. I'm not sure the regulator's the right one to do that, but sometimes we need to put our I'm going to say our commercial interests, I'm not just going to say to one side, but form something that can share data. I mean, it's been happening with market data for for as long as I can remember. Well, now we need to be doing it with AML data as well.
Fantastic. Thank you. Right, we are really nearly out of time. So one last question to all my panelists. If you want to get your crystal balls out, and Amir, you've already practiced at this now, what is the one innovation that would revolutionize financial crime controls over the next few years? So, Jeff, shall I start with you?
You can start with me, but I've already said it. I think I think the innovation is in some form of collaboration amongst financial institutions, insurance companies, or whatever. I think sharing the data is going to be key.
So you're talking about collaboration among the private sector here, basically.
Exactly. Yeah.
Fantastic. Thank you. Yuri?
Beyond systems or innovations, I think it's more about raising the common interest in fighting financial crime. That is currently not the case. The interest at government level, institutional level, individual level is not enough aligned, I think.
Fantastic. Thank you. Martin?
So I think the innovation that's going to transform financial crime is the one on the side of the attackers. And it's the increasing volume of crime and criminal applications by a factor of 10, 100, or 1,000 in the coming years by automating away and by outsourcing parts that we see on the black market already. So we see organizations that forge you any kind of document you want as a service for a couple of fractions of bitcoins. And this is something that allows you to scale up the operations and then do the transaction that you need.
So we're talking synthetic IDs, deep fakes, and...
We talk basically synthetic IDs as a service. I'm talking about deep fakes with deep AI used to generate those fakes as a service applied at high volume. And that's going to completely transform the industry in our assessment.
Fantastic. Thank you. And Amir?
I'll put my idealist person's hat on. I think we need to get away from the tick box approach. It's very easy to do the tick box approach. I've collected this information. I know what the source of funds are. I think it's better for us to collect less information, but collect the right information to completely understand what our customers are doing, where the source of funds are, what they intend to do with those funds and with those businesses. If we can get to that, then we will go a long way in fighting financial crime.
Fantastic. Thank you, Amir. It is hard to do that when the regulators don't get off the tick box approach, right? If someone arrives with their tick sheet, then it gets even harder.
We're better than the regulators.
Fantastic. On that note, right, all good things must come to an end, and so has this panel discussion. A big thank you to Richard and the organizers, and to my fantastic speakers who've been so open in taking all the hard questions. So Jeff, Yuri, Martin, and Amir, thank you very much.